Tesla stock, the most controversial and most valuable car company out there today. It's worth almost 10 times as much as Ford and worth more than all three major American car companies combined, which is insane to think about considering they're nowhere near as old. A lot of people also think that Tesla's stock price is way too high. After all, it's gone up almost 400% in the last few months. On March 18th, it was just $361 per share. Now it's sitting at over $1,500. But there's still die-hard Tesla fans who think this is only the beginning, and one day Tesla will become the first trillion-dollar car company. So let's break down both sides and see what's really pushing this market. At the end, I'll talk about what I think the future holds for Tesla, based on a Harvard research study. But before we jump into it, I'm curious as to what you all think. Are you all in on Tesla, or are you going nowhere near that stock, or just really confused? Let me know down below. Hey everybody, my name is Hasham Khan and welcome to Income Over Outcome, where I give you college, career, and of course, personal finance tips. There's no doubt that Tesla has been one of the best companies to invest in over the last 5 years. If you put in $1,000 into Tesla in 2015, you would have over $6,000 today. Whenever Tesla's stock price sees a new high, skeptics come along saying there's no way their stock price is going to go higher, but they're proven wrong time and time again. Fundamentals just don't seem to matter to Tesla investors. But I do think their earnings call tomorrow, July 22nd, will have a huge impact on the future of their stock price because there is so much at stake. And if you're watching after that earnings call, then let me know if my predictions are right. If the earnings call is positive, then Tesla will probably get into the S&P 500, which is huge because then every single fund that tracks that index will have to buy Tesla up. And that will probably push up their stock price even higher. I'll talk more about what that means at the end of this video, but let's focus on where Tesla is at right now. The company is actually doing a lot of things right. They have an excellent business model where they operate more like a tech company than a car company. So it's really not surprising to me that they're worth more than every single other car company out there. That's why people think Tesla can rival companies like Google, Amazon, and Apple to become a trillion-dollar company. And I'll talk more about that in a little bit. But basically, Tesla is moving more and more towards a subscription-based software company. They already have things like live traffic maps, in-car streaming, and internet browsing in a subscription package. But Elon Musk wants to make self-driving a subscription, which would be huge money. In the earnings call, I would expect Tesla to post a profit, but I wouldn't expect a big enough profit to back up the $180 billion increase in their market cap. So Elon Musk really has to focus on making investors feel comfortable in the future of Tesla. One of the biggest reasons Tesla has gone up so much in such a short amount of time is because it's the go-to stock for young investors. Over the last few months, all the main brokerages like TD Ameritrade, Charles Schwab, and Robinhood have all reported an unprecedented number of new people joining their platforms, probably because people are bored in quarantine and want to make some money. So that means there are a bunch of new people investing. But what's even more interesting is that Tesla is the #1 bought stock on Robinhood in the last month. And there's good reason for that. The company is innovative, they have really cool cars, and their CEO posts amazing memes on his Twitter account. The perfect formula for young investors to want to invest. So it makes perfect sense as to why Tesla has gone up an insane amount, even though they haven't made any big moves, actually warranting a 400% increase in their stock price. These new investors aren't looking at Tesla's balance sheet, they're buying into the future of electronic cars and all of the hype that goes around that. But successful investors know that hype doesn't come out on top over the long term. It's only good for quick wins. What's really interesting is that Tesla isn't the only electric car company surging right now. It seems to be a trend around the globe. And no, I'm not talking about Nikola Motors. The Chinese company NIO, which makes electric high-performance cars, is up almost 600% in the same time period Tesla went up 400. However, it looks like their stock price is starting to come down, plummeting 18% in the last week. The company BYD is also one of China's biggest electric car makers, and Warren Buffett actually owns 25% of them. And in just the last few months, they've gone up about 446%, just like Tesla. And there are a handful of other electric car companies surging right now. So it's very clear that the market believes in the future of electric cars and they want these companies to succeed. But the question is, are all of these companies valued way more than they are actually worth right now? So now let's get into the controversial part. What does all of this really mean for the future of Tesla? And can it really be the first trillion-dollar car company? It's really short-sighted for anyone to be positive that Tesla will hit a trillion-dollar market cap. But honestly, I wouldn't be surprised if that happens eventually based on the way the market reacts to Tesla. Tesla's stock skyrocketed the last time they posted a profit, and they announced that they've delivered more than 2,000 more cars this quarter than last. So the odds they have a positive earnings report are very likely. But despite that, I'm not very confident in Tesla as an investor, and here's why. I found this Harvard research paper that studies the effect of surges on stock prices, and I'll summarize it now so you don't have to go through the entire 58-page paper. But if for some reason you feel like looking at it, I'll link it in the description. The study found that when a stock sees a really sharp price increase, it doesn't necessarily mean that the stock is not going to perform well in the future, but it does mean that the likelihood of a crash is really high. If you look at this chart, you'll see that if a stock outperforms the market by 50%, then there's a 20% chance of a crash. But if the stock outperforms the market by 150%, then there's an 80% chance of a crash. Tesla is up way over 150% compared to the overall market. So according to the study, it's almost inevitable that their stock price is going to crash by at least 40%. And there's history of this happening with Tesla in the past. Back in March, Tesla had outperformed the market so much that when the overall market crashed by 30%, Tesla went down by nearly 60%. I'm a big data guy, so I believe the story the numbers are telling us, and there's nothing concrete to back up a $180 billion increase in Tesla's market cap in just a few months, except hype, and that's not enough to sustain a stock price. I honestly believe it's really risky to buy Tesla at its current levels. Even if you really believe in the company, like I do, you have to realize that its stock price is extremely overvalued right now. As far as long-term performance, I think Tesla has great potential because of their business model and because they're leaders in the market. Like I said before, I wouldn't be surprised to see Tesla hit a $1 trillion valuation, but that's definitely not going to happen anytime in the near future. And my issue with them right now is the fact that their current stock price is not backed up by performance. It'll only take one piece of bad news to trigger a correction in Tesla's stock price. So personally, I won't be buying Tesla right now, but if it does go down to a more reasonable valuation, I'll consider adding it to my portfolio. Buying into an overvalued stock because you think you might get some great returns is the definition of FOMO, which is a mistake that burns a lot of new investors. You always need to remember the basic principle of investing: buy low and sell high. Tesla is a perfect example of why that's difficult to do. When a stock is high, that's when there's the most hype around it and people want to get in. But then the price goes down and people don't have enough money to buy in at the lower price because they already have all their money in the stock and they're scared to lose even more money. And that is exactly why a lot of investors buy high and sell low. I also think there's a decent chance of Tesla getting approved to join the S&P 500. And if that happens, Tesla will be one of the most valuable companies to ever join that index. That will have a huge impact on all of the funds that track it. If Tesla does well, then so will all of the funds that track it, like SPY. But the great thing about these index funds is that they're fairly diversified, which means there's lower risk. If Tesla isn't performing well, but the rest of the market is doing great, well then the index funds aren't going to take that much of a hit. That's why I preach that index fund ETFs are the best way to get a good return in the stock market. That's another reason why I'm not rushing to buy Tesla, because I own a bunch of S&P 500 index funds. If Tesla proves well to join that index, well then I'm going to benefit from that. My advice to you is to think like a smart investor. Never invest in a stock only because of hype, and only buy high value growth stocks. Minimize your risk by buying index funds. If everyone is buying something, then you should be asking more questions. Definitely let me know what you think is going to happen with Tesla. I read all of your comments. And if you haven't already, be sure to hit that like button and hit that notification bell, or else you won't know when I post next. I post videos every single Tuesday and Friday, so be sure to come back. But until then, take care.